Hey everyone, welcome back to FinSphere Global. I need to stop everything I was planning to cover today because something just crossed my desk that changes the entire conversation around silver. If you manage money, if you hold silver, if you've been watching institutional flows trying to figure out what the big players are doing, you need to hear this right now. What I'm about to share with you has not hit mainstream financial news yet. And honestly, when it does, I expect a very different spin than what I'm going to give you here. We're talking about CALPERS, the California Public Employees Retirement System, the largest public pension fund in the United States, $450 billion in assets under management. And according to internal documents that have now surfaced, they just held an emergency board session to discuss a major portfolio reallocation. The target? Physical silver and silver-related assets. The allocation? 8% of total holdings. Let me say that again so it sinks in. A $450 billion pension fund is reportedly moving 8% into silver. That's $36 billion, flowing into a market that, on a good day, trades a fraction of that annually in physical form. Now, before we go any further, let me be absolutely clear about something. I'm going to walk you through this document, I'm going to explain what it means, and I'm going to tell you exactly why this matters for your portfolio. But I'm not telling you to buy or sell anything. This is not financial advice. I'm giving you information and context so you can make your own informed decisions. That's what we do here at FinSphere Global. No hype, no manipulation, just real analysis you can actually use. Now, let me show you what we're working with. The document in question appears to be an internal memo dated within the last 72 hours. It references an emergency session of the CALPERS Investment Committee. The subject line reads, and I'm quoting directly here, Strategic Reallocation Proposal, Precious Metals Exposure with Emphasis on Silver. Now, here's the truth. This didn't come through official channels. This was leaked. And I want to be transparent with you about that because transparency is what separates real analysis from speculation. What I can tell you is that multiple sources have independently verified key details of this document. The formatting matches known CalPERS internal communications, the signatories listed are current board members, and the timing aligns with recent closed-door meetings that were added to their schedule without public explanation. Does that make it 100% confirmed? No. But does it deserve serious attention and analysis? Absolutely. Now, let's talk about what the document actually says. The memo outlines a three-phase reallocation strategy. Phase 1 involves an immediate 2% shift from underperforming fixed income positions into physical silver holdings, primarily through allocated accounts and direct acquisition. Phase 2 proposes an additional 3% allocation into silver mining equities, royalty companies, and silver-focused ETFs with physical backing. Phase 3, scheduled for Q4 of this year, would add another 3% through a combination of futures positions and strategic reserves held in approved vaulting facilities. Total exposure at completion, 8%. Now, I want to explain why this matters beyond just the headline number. CalPERS is not a speculative hedge fund. They don't chase momentum trades. They don't gamble with teacher and firefighter retirement money. They are one of the most conservative, methodical institutional investors on the planet. For them to even discuss a single percent allocation to silver would be notable. For them to propose 8% in an emergency session, that's unprecedented. And here's what the financial media won't tell you. This isn't happening in isolation. Over the past 6 months, I've been tracking unusual institutional activity in silver markets. Sovereign wealth funds increasing allocations, central banks quietly adding silver to reserves alongside gold, major family offices shifting from paper assets to hard commodities. This CalPERS document, if authentic, is the most significant confirmation yet that institutional money is rotating into silver at a pace we haven't seen since the 1970s. Now, let me address something you might be thinking. Why silver? Why not gold? Why not just increase their existing commodities exposure? The document provides insight into this. And honestly, reading their reasoning feels like reading the analysis we've been doing here at FinSphere Global for months. 3 primary factors are cited. First, industrial demand acceleration. The memo specifically references the solar industry, electric vehicle manufacturing, and military applications. It notes that silver demand for photovoltaics alone has increased 40% over the past 3 years, with projections suggesting a doubling by 2030. Second, supply constraints. The document highlights that primary silver mine production has remained flat while demand has surged. It mentions the declining ore grades at major mines, the lack of new large-scale discoveries, and the concentration of production in geopolitically sensitive regions. Third, the gold-to-silver ratio. This is where it gets interesting. The memo includes an appendix with historical ratio analysis, noting that the current ratio remains elevated compared to historical averages. It explicitly states that silver offers asymmetric upside potential relative to gold at current price levels. Now, here's something that caught my attention. The document includes risk disclosures, as you'd expect from a pension fund, but the language around those risks is revealing. The primary risk cited isn't volatility, it isn't liquidity, it's acquisition risk. They're worried about being able to actually obtain the physical silver they want to buy. Let me read this section directly. Given the scale of proposed allocation and current market conditions, the committee acknowledges potential challenges in executing physical acquisitions without significant market impact. A phased approach is recommended to minimize acquisition costs and market disruption. Do you understand what that means? The largest pension fund in America is worried that they might not be able to buy enough silver without moving the market. That tells you everything you need to know about the real supply situation. Now, let me give you some context on the numbers. 8% of CALPERS is approximately $36 billion. The entire annual mine supply of silver is roughly 800 million ounces. At current prices, that's around $72 billion worth of new silver coming to market each year. But here's the problem. Most of that silver is already spoken for. Industrial users have contracts. Jewelry manufacturers have supply chains. The government mints have purchase agreements. The amount of silver available for new investment demand is a fraction of total production. If CalPERS actually executes this allocation, they would be attempting to acquire nearly half of a single year's available investment supply. And that's just one pension fund. Now, I want to explain why this leaked now and why it matters. Leaks from institutions like CalPERS are extremely rare. Security is tight, NDAs are enforced, the consequences for leaking are severe. So why would someone risk their career to get this information out? I can only speculate, but here's what I think. Someone inside that organization believes the public has a right to know what's coming. Someone believes that retail investors shouldn't be the last to understand the shift happening in precious metals. Someone believes that transparency matters more than protocol, and I respect that. Now, let's talk about what this means for you practically. If this allocation happens, it will not happen quietly. When a $450 billion fund starts buying silver, prices move. When prices move, other institutions notice. When other institutions notice, they start buying. This is how momentum builds in commodity markets. But here's what I want you to understand. The time to position is not after CalPERS announces their purchases publicly. The time to position is when you have information that gives you an edge. That's what I'm giving you today, an edge. Now, I want to be very careful here because I know how financial content works online. I know there are channels that would take this document and scream about silver going to $500 tomorrow. I know there are creators who would tell you to mortgage your house and go all in. That's not what we do at FinSphere Global. That's not responsible analysis. What I am telling you is this. Institutional money is moving into silver. This document, if authentic, represents the most significant confirmation of that shift we've seen. And the supply-demand dynamics support a continued reallocation from paper assets to hard commodities. What you do with that information is your decision. Now, let me tell you what we're watching next. CalPERS holds public board meetings monthly. The next scheduled meeting is in 2 weeks. If this reallocation is real, we should see some acknowledgement in the public session, even if details are limited due to trading sensitivity. We're also watching for copycat moves. When a fund like CalPERS moves, other pension funds pay attention. Teacher retirement systems, state employee funds, union pension plans, they all look to CalPERS as a bellwether. If we see similar allocation announcements from other major pensions over the next 60 days, that would confirm this is not an isolated decision, but a coordinated institutional thesis. I'll be covering all of it here on FinSphere Global, real-time analysis, no hype. Just information you can use. Now, here's what I'm asking from you. If you found this valuable, if this gave you insight you haven't seen elsewhere, subscribe to the channel, turn on notifications. Because when the next piece of this story drops, I want you to hear it from me first, not from mainstream media 3 days later with their own spin. And if you're already subscribed, I need your help. Drop a comment below. Let me know what you're seeing in your local markets. Are dealers running low on inventory? Are premiums increasing? Are you having trouble finding specific products? That ground level intelligence is invaluable. It helps me, and it helps everyone in this community understand what's really happening beyond the headlines. Now, let me leave you with something to think about. Pension funds don't make emergency reallocations because everything is fine. They don't add new asset classes because they're bored. They make moves like this because their analysts, their risk managers, their actuaries are seeing something in the data that demands action. What they're seeing is what we've been discussing here for months. A supply-demand imbalance that cannot be solved by paper contracts, a monetary environment that favors hard assets, an industrial demand curve that only goes up. CalPERS has 450 billion reasons to get this right. They've done their homework, they've run their models, and they've concluded that silver deserves a significant allocation. The question is, what are you going to do with that information? This is FinSphere Global. Real analysis, real context, no hype. Subscribe if you want to stay ahead of these moves. I'll see you in the next update.